Guys, welcome back to the channel, welcome back to a new video. We're getting dump after dump after dump for BTC. You might be asking yourself, where is the bottom? And we gotta pump up sometime, some point in the chart, but not yet, most likely. Today we have an absolute jam-packed episode, so I have a lot to talk about. We're going to dive in straight away, but not before I ask you to like, subscribe, click the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think it is useful. Also feel free to follow me on Twitter and Instagram. Last week I absolutely flooded you with info on Twitter, and I expect to do the same this week because it's just so much going on in the markets what I find important to update you about. Now let's start diving in, and I first want to dive in on the YouTube channel itself, because on Saturday I uploaded this video. Is the bear market over, and when can we expect to be close to a bottom, where and when? And I'm going to show you exactly on a just very simple measurement that everyone can perform, where you can approximately see where the bear market end could be, what could be the lowest price, what can we approximately expect, and from there on we could maybe rally up. Also, if you have watched this video, I would really advise you to watch this video. We will crash again, where I'm showing you exactly why the bottom is not in and where I think the bottom would be in. So these videos would be very educational, and although they're not so much viewed, I think they are great videos full of info, so definitely check that out. Now, something I want to start off with, and I hope it's visible on your phone, on your screen, and if it isn't, then I'm looking here at the monthly return of the month of September. We are now at 6.8, almost 7% in the minus, and that is exactly the average of the last few years. And with that being said, I would say that if we would stop at this current price level where we are right now, and I know it's the 19th of September, so we still have a couple of days to go, but that would be exactly on average. And what is that price level? Well, the current price level is 18,680, so let's say 18,700, 18,600, whatever, all kind of the same. That would be the target approximately, percentage wise, average wise, historic wise, for the month of September. But of course we can also go much higher or go much lower, but it is interesting to see that that average over the years is always so respected in the last 5 years. Now what you're looking at is BTC USD pair on the 4 hourly, and this dump right here was the dump in the Asian session, and we are blasting right through to our support and resistance box that we drew out for a long time already. And the question is, are we going to bounce again like we did here, here, and are we going to do this now again, or are we really going to dip lower, crack that 17,600 all the way here on the left, or are we going to pump up from here and take everyone by surprise? Let's first take the bullish scenario. If we would go higher, then I would just very simply pull out a fib retracement from the current bottom to, let's say, this high. That would give us a target of approximately 19,500. That is also the value area low of the current bigger price action. With that being said, I need to adjust something what I want to do during the recording. Look at the value area low. That's now, like I said, approximately 19,500. But with the current dump, there's more data in the indicator, and it is right now approximately here. As you can see in your screen, the thick blue line. I am going to extend it to the bottom. Sorry, to the end all the way to the right, and then we're seeing that the value area low is now shifting to approximately 19,200-ish. So if I now zoom in again, then we're seeing that that doesn't coincide anymore with the golden pocket, but it would be already the first strong resistance coming into play right here. And with that being said, support and resistance, I also saw that this actually, and let me quickly zoom into the hourly, that's a bit more clear, is that we're having quite the support and resistance flip right here. Let me take out the fib retracement a little bit more clear. There you can see that we kind of were making a bit of a broadening wedge kind of idea. Yeah, as I said, we just went lower, broke it, retested, went lower, and now hit it again, and it looks like that this candle on the hourly is again in the red, so it would play in perfect to be resistance once again. To be honest, I was actually looking this weekend to a little bit of a different pattern, and that was to maybe have a bit of a rounding bottom, go higher somewhere to the 0.5 or the 61.8, and then go lower again. Obviously that didn't work out. Alright, let's quickly go back one more time to the bullish scenario. So we said, okay, we having one right here at approximately 19,500, or if I pull it here, we have it at 19,700, but a bigger one of course would be the top from here. That will be approximately 21,000 to 21,200. Do I expect with the current dump that we're getting there? Absolutely not. Also knowing that we have still a lot of news coming out this week, for example Fed raising interest rates, I think it's going to be again a very bloody week. To the downside, I'm looking at this S&P, that is the absolute bottom, 17,600. We already talked about it multiple times, is that we might go lower and then swing fill pattern right away, go up, take the liquidity just underneath, and then maybe trend sideways. If that doesn't happen and we have maybe a bit more of a slower grind, we're really breaking it, of course then all hell break loose, and then it's a bit of a black hole. I found 14k approximately a good bear market number. To be honest, I'm not so super interested in it, but that would kind of make sense if you also look to historical data. Again, if you want to know more about which exact number I'm looking at and what the reasoning is behind it, look at this video, bear market over, Bitcoin close to bottom, when and where, or this one, why the bear market is not over, and we will crash again. Then I quickly want to hop over to ETH. There we had this bear flag playing out perfectly, and I said also last week, if we are going to lose the current level, then I'm looking out for the golden pocket support and resistance flip at approximately 1300. And look where we are right now, exactly at that golden pocket, exactly at that support and resistance flip. So if there is a moment where we need to go higher, this is the preferred area to do so. If we are going just a little bit higher, making a lower high again from here, bear market still very much on. I mean, this is as bearish as it could be. As you can see, lower highs, lower lows, lower lows, so absolutely bearish as it could be. And I also always have to laugh a little bit with all these quote-unquote major events in crypto, like now the ETH merge. It is always the same. It is always a sell the news event. Always. So if you were super bullish towards this merge, and if you got caught up all by surprise right now by the dump, I'm sorry, but that is I find pretty stupid, and I really want to advise you to keep following the channel, because we are not going hand in hand with a update of ETH and therefore we're going skyrocketing to 100k, yippee-ki-yay. That's not how it works. The narrative is still for months the same. It's the dollar, it's the S&P, it's inflation, and Bitcoin is just moving along. It is not an asset that trades independently and separate from other assets so far. We always see a very strong correlation, but I'm always showing you guys why it's dumping and why not. And this whole ETH merge, it is bullish, don't get me wrong, it is bullish, but it's bullish in a very long time span, like a year from now, 5 years from now, 10 years from now, then it will really work. But here on a slow time frame, I was not, to be honest, expecting anything different than just a dump down. I'm sorry, but that's just the way it is. Quickly to the dollar index. You have seen this already so many times, but because it's so important, keep showing this. We're having this trend line, which I also showed in the video last Saturday, and this kind of now looks like we are really going to skyrocket to the upside vertical. That of course itself is unsustainable, and at some point it will break, and then once it breaks and it goes a little bit lower, and it could be from this level, could be much higher at 112, 120, what is approximately my bullish target, that we maybe go a little bit sideways, and then finally stocks maybe find a little bit of a base. BTC can also find a little bit of a bottom. Not saying right away if this dumps then we spike up, absolutely not, but that would make sense that once this thing kind of cools off, that the other assets find a bit of a bottom, maybe a little bit of a rally up, but that is it for now. On the smaller time frames, let me quickly zoom in to the dollar index still. There we are seeing that yeah, we're just kind of raging a little bit sideways. I think I showed this last week, where it looks like this is a little bit of a wedge-ish kind of thing, flag, not really sure, but like I said, yeah, once we're going higher again, still the big target is still 112 to 120. This one right now top is 110 point, so you say 110.8. I think that's around a nice round number. I do have to say, on the very macro, the dollar index, it looks like it wants to peak out a little bit. What I mean with that is that if we're looking right here, then we're seeing on the weekly that yes, the money flow is up, but the momentum waves are already coming down. That is a good sign. And on the daily, it also looks pretty okay. Oh, let me take this out. On the daily, it also looks pretty okay. There we're seeing that the momentum waves are slowly coming down here, and it looks like the money flow also wants to come down a little bit. So you could make a case that we are slowly topping out a little bit. Now, something that I really keep in mind, a very strong possible scenario, is that one more time, for example Wednesday, when the Fed start rising the interest rates, is that we shoot up. That is maybe then the blow off, and that will be the absolute crash for BTC below that 17,600. That will be then the absolute dump, and that is then maybe possible the absolute low. Not saying that that would happen, but I could imagine on these kinds of events that we are going lower, because so far every interest rate hike from the Fed this year, 100% guarantee we had a red dumpage day, sometimes also the day before and also the day after. So it is just a very bearish event. Everyone is somehow always very surprised, but the Fed has just been very clear. We're going to keep rising the interest rates until we have inflation under control. But why isn't everything dumping? Well, it's very easy. Once they start rising the interest rates, money is rotating out of crypto, out of stocks, into assets that is a safe haven or gives them a return. So if you start rising the interest rates, then suddenly saving and bonds become interesting again, and then money is rotating out of stocks into these assets, or for example into the dollar as a safe haven, where I have seen now that gold is absolutely not the safe haven in this crisis. So yeah, with that being said, then of course all eyes on the price for the Fed this week. Then quickly the S&P, as said, once we enter this support and resistance box, I expect us to stay there for a little bit. I'm going to take out this fib retracement and this box that I have right here. So right now approximately at 38.73. Futures are also in the red, so like I said, I expect us to stay here for a little bit if we're breaking lower 3,500. But the bottom of this box would be approximately 4% low of where we are right now. I think we could break it maybe this week already, because last week we had a very red day, a very red week, 4.77% off, completely erasing the profit from the week before, and that was a very bloody week. Do I have any more news for you? I do not think so. Like I said, I am watching this day trade pattern right here. If we are not being able to go over, then I think we're going to roll over again, and then my eyes on the price are here, 17,600. Are we going to break it or not? If we're going higher, then of course I want to see this hold. Then we have also the macro value area low that comes into play first. That is right now here at 19,150, 19,200. That will be a important resistance to come over. Then we have a macro point of control. Then we have this resistance line. We have the top of 2017 in 20,000. Long story short, we just have a lot of resistance above us, and with the current market conditions, with all the news coming out, I just don't really see us now pumping back up to 21, 22, 23,000 to then just dump down again. It will be the ultimate FU, of course, to trap all those long traders, people closing out the shorts, going long, trap those longs, then dump them very hard. But since we have a pretty short time span until Wednesday, I was a little bit surprised by the dump already, by the Asian session. Like I said, I was hoping for a little bit higher and then a dump. I just think today red, probably tomorrow red, and Wednesday also red, and then maybe a bit of a reversal. That would make sense. If that doesn't happen, I will update you as always in the meantime on Twitter, so definitely follow me there. I am right now really prepared for all scenarios, because it's just ziggy-zaggy, wiggy-waggy, can't go really any way. That also makes it super exciting. But in general, of course, if you don't do anything crazy, you would be more safer off with a short. With that being said, yes, we are trading underneath the value area low, but since it just looks so bearish, no higher highs, no higher lows, every pump so far in the last week or so has been just used to sell off to. On the macros, we are negative. So super bearish. S&P on the macros looks super bearish. I just have to be honest with you guys. Not expecting we go to 0, we go to 1,000, and that was it. Absolutely not. But be realistic. If we trying to zoom out a little bit, you're probably better off with a short. See whatever you want to do with it. It's completely up to you. That's just my take on it right now. If you like this kinds of updates, again, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share the video with your friends if you think this is useful. And that was it actually already for this video. And see you guys very, very soon again in the next one, guys. Thank you so much. Bye-bye.